the Jet Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, everybody. Welcome to another episode of Jet Setting Wealth Advisory, where we spotlight financial leaders and innovators helping clients reach new altitudes in wealth as well as in life. I'm David Yu, airline pilot, financial advisor, and the host of the show. Each week, we explore strategies to help professionals like you chart a clear course towards financial freedom and long-term success. Today, we're joined by Ariel, a talented tax professional with Goldstein Tax Advisors, where she's been a part of the team since 2022. Ariel earned her master's in accounting from Chatham University and brings extensive experience preparing and reviewing both personal and business tax returns. Her expertise extends bookkeeping, tax projections, and advisory work, helping clients plan ahead and making smart financial decisions. Year-round, outside the office, Ariel enjoys tending to her garden and spending time with her husband, 2 kids, and their 3 cats. A perfect balance between work and home life. So get ready for a great discussion about practical tax planning, client relationships, and how proactive strategies can make a real difference when it comes to tax season. And along, we have her colleague, Barry Kaufman, who was previously on another podcast with Beth Goldstein, who is also on the show today. So welcome to the both of you.
Thanks so much, David. We're really
fantastic. And it's good to see you again, Barry.
Absolutely. Happy to be back anytime you need me.
Okay, sounds good. So let's talk about the journey and the role at Goldstein Tax Advisors. Let's start with Ariel. What inspired you to pursue a career in accounting and specialize in tax strategy?
David, I think, kind of like you, I come from like a more diverse background. My first career was as a teacher of English as a second language.
Okay, wow, great.
Yeah, so very different. And I traveled the world and taught English. And I think it does really help kind of give me a different perspective on tax advisory and tax planning. I think a big piece that some people miss is that there's a lot of people in this profession and a lot of communication that has to happen of more difficult topics and a big wide range of different people too, right? So I think that education and like that background has been really helpful and just kind of doing that. And I think it's also like something that's ubiquitous, but people maybe don't understand or they're worried about it. And I think kind of my role is to help them understand as much as they want to understand, help demystify it, and help take a lot of the panic out of filing your taxes in April.
Absolutely. Fantastic. And since 2022, you've been at Goldstein Tax Advisory.
Right.
How has Barry been treating you?
Terribly.
That's the right answer.
Terrible.
No, it's been great. One of the things I really like about Goldstein is a very collaborative environment.
Seems that way, very much so.
Right? So you don't have that hierarchy. It's more like a collaborative. Everybody has something to offer. There's a lot of discussions about situations. And that's a great way to kind of grow as a professional. And also, I think that's a great way that you can serve your clients, right? No one person is an expert in all areas. So if you work in a collaborative environment, it can really just kind of up everyone's game.
Team effort, absolutely.
Iron sharpening iron.
Iron sharpening iron. I love that. So that's most likely what have attracted you to Goldstein Tax Advisory and the firm and its approach to client relationships. Would you say because of the office environment and the culture, that is what makes that secret sauce of success in approaching client relationships and helping them?
Yes. And I think especially for me, right? Because I was saying what I like having the time to be able to talk to someone, develop that relationship, get to know them and get to know their individual tax situation. And a lot of firms, that's just not valued, right? You just kind of want to do the tax return and get them out the door. right? So it's nice to be in a place where you're like, oh yeah, no, you can have a phone call, you can have a meeting and take the time to like talk to them on individual level, understand their concerns, and have the time to go through their questions that they want to ask for sure.
Yeah,
Absolutely.
we don't bill typically on an hourly basis. We try to build rapport. We don't want to feel like lawyers where we're always just putting an extra 0.1 or 0.2 down in those timesheets. And I've worked in public accounting firms where that happens. And like
Sure.
Ariel saying, gets very impersonal very quickly. And that's not what we try to do here.
Yeah, and talking as a person that works with a CPA firm, when you have those billable hours and adding that, it makes you not want to call because of the valuation considerations of, is this worth $100 to get the answer, so to
Exactly.
speak.
Or is this a big enough event that I have to call, my CPA and tell them about it? Or should I just let them know in March? Right?
Sure,
Right.
absolutely.
When it's way too late.
When it's way too
When
late.
it's way too late. Yes.
Yeah.
We spoke about that in the last podcast. Yeah, when it comes to April 14th, they want to get something done. It's
too
not
late.
considerate.
Plan early, plan often, David.
Yes, absolutely. So both of you work closely with individuals and business owners on
Yeah.
both compliance and the advisory service. What's the most rewarding about helping clients understand their numbers? And let's go with Ariel first, and then maybe you can pitch in Barry after that.
I mean, I feel like the most rewarding part, coming at it from a female perspective too, is that I feel like a lot of women are now like the CFOs of their household and are making these tax decisions, making these financial decisions. So I really like being able to kind of give them the background and the understanding so they know what the right decision is for their situation and why they're making it. And if you can, people are doing all sorts of cool things. So I think if you can support them and help them through the tax ramifications and the tax saving strategies of, their project, of their new job, of their new business, that's a really, or even of like their nonprofit that they're starting. That's a really cool feeling, right? You can have a really, I'd say, a nice impact on a lot of people's new endeavors.
Sure.
Right. So that's the most satisfying part for me.
Absolutely. Helping others, you feel happy and content and fulfilled by helping others.
And a lot of it is, David, as I was saying, kind of that anxiety, right? So people are anxious. They're like, oh gosh, I'm starting this new business. I don't know if I can. And like, how do I do it? And how do I plan it? And what do I have to do? And I'm not sure. And then you can come and be like, hey, we have your back, right? You have to do this and this, right? And you can just kind of see that anxiety melt away. And they're like, oh, great. Right?
Absolutely.
Right? So it's like a lot of it is just like confidence building and just giving people that information they need. So then they're not worried about it. The anxiety's gone.
Barry, anything to add to that?
Yeah, I would say what's really helpful when I get to interact with clients, what I really like to see is that they get a sense of value from it. And it was hard for me way back in the day when people would say something like, oh, I hope that, or they say that was so helpful. And I would say, well, what did I really do? All I did was say a few little things that, of course, I know they're not that hard. And it took me some time to realize, well, I can't really judge what other people think are helpful. And so it's actually very nice to be able to get that feedback. And so it's not all I want is for other people to get value, but it is something that I would note is pretty nice to let myself feel that I've been helpful to someone.
Sure. So in your particular firm, which I'm really interested and attractive about to the services that you provide, is you guys specialize in equity and RSU, restricted stock units compensation type of methodology. So one of the topics that we would like to discuss is the RSU, or the restricted stock units. For listeners who may not be familiar, can you explain what they are and why they're such an important part of tax planning?
Sure. So, restricted stock units are kind of equity compensation. They're very popular and getting more popular. And I'd say one of the attractive things about them is there's kind of fewer decisions to make up front. So they vest on like a quarterly schedule often, so you know what you're getting and when. And they also, as they vest, they come through as ordinary income to you on your pay stub, just like other forms of compensation, right? So there's less
Sure.
things that you have to be aware of when they start vesting. The part that I want to talk to my clients about, though, is when they start vesting, we do want to make sure that your withholding is appropriate. A lot of
Sure.
businesses will withhold, just like bonuses, will withhold at that 22% federal income tax rate. But for a lot of these companies, and if RSUs, if you're having a good year, right, that the income that comes through to you is the fair market value of that stock on the vesting date, right?
Sure.
So it very easily, and this is a good problem to have, but it very easily can push you into the realm where you're in like the 32, 35 like tax bracket, and that 22% withholding is not enough. So then we either have to reach out to your payroll department, see if they can adjust your withholding up, or if that's something that we can help calculate quarterly estimates for you.
Okay. And
Yeah.
anything to add to that, Barry?
I would say that's very accurate. I do think it is something that's getting more popular, or perhaps we're just running into people that know other people that are having it more. So maybe it's just more popular to us, but it's definitely something where people need to consider what the most impactful outcomes can be. Because if they don't, then there's not just penalties that could happen, but there's
Right.
surprises. People don't like getting hit with big bills. So
Mhm.
some of it is to avoid paying more, which would be the penalties, and some of it would be to also avoid having that shock all happen at once.
And I think it's kind of a conceptual, like it's a new concept for a lot of people, right? Because you're not getting cash in your bank account, you're getting stock, right? So a lot of people, because they didn't receive the cash, to them, it's not something that would be taxable or would be subject to tax. So it can be a surprise if you've never got equity compensation before, right?
Yeah, and you can't
Okay.
pay for your latte with RSUs, so
Mhm.
people don't really feel like they have more buying power. They just have more wealth. And that's a nice thing to have, but if somebody's working in either a tech company or some other type of industry where they may not have the most financial savvy experience, they're great at coding and doing all types of other things, but they may need to know that still counts as income.
Yeah, and there's a lot of,
Mhm.
vocabulary around it, which can be like a learning curve for people, right? Like even the idea of like, okay, so the grant date and the vesting date, right? The grant date, David, is the date just when those shares are promised to you, but
Sure.
because you haven't earned them, there's no tax consequence at that date. And then the vesting date is just like when you receive them, right? But if you have never gotten equity compensation before, you're like, what, the vesting date? What are you talking about? Am I getting a sweater? So it
Sure.
can be like I think there's like a learning curve there too, right? Just
Yeah.
the
So
hardest.
what do both of you see in terms of the common mistakes or surprises that people face when they do receive the restricted stock units?
At the moment they receive it, a
Mhm.
lot of times they're not proactively thinking about what that means.
Yeah.
And we find
Okay.
out after
Yep.
the fact when we see on a statement or somehow they'll send a document that says, oh, we got this 2 years ago. And a lot of times we'll think, well, why didn't they think 2 years ago to reach out to us? And when we see their prior year tax returns, they're owing money and they're finally saying, why am I owing so much money? And now here we are in 2025, getting near the end of the year. I'm going to owe again. How do I stop that? And we think, well, knowing what is going to happen is probably the best idea to figure out.
Okay.
Yeah.
All right. So not being proactive, getting the RSU and just saying, okay, sounds good, and not
Great.
really doing
Right.
anything about it or learning what the benefits of this can be and maximizing those benefits.
For sure. And I think just being able to like look, I mean, this may sound a little like, but just being able to look at their pay stub and see like
Mhm.
what is happening and when and
Mhm.
what the withholding amount is and if that may be an issue or not, right? So
Sure. Sure.
that's like something I talk about with people too, because they're like, well, I'm having tons of taxes withheld. And I'm like, that's not all federal though. There's FICA in there, you know?
Oh, yes.
Right. So
Yes.
so a lot of times they think they're having more withheld federally than they
Sure.
actually are.
Sure.
Yeah, they see the difference between what they can roughly calculate their per paycheck salary to
Right.
be. Usually when they don't look at their paychecks, because I'm not trying to say people have no idea what's going on. They have a lot of idea of
Mhm.
what they would expect to get. And then of course everybody knows there's quote taxes, so you get
Mhm.
less. But that
Sure.
composition of taxes is very important to be aware of, particularly for equity compensation, because there's so many different ways that it can go wrong. And we just want to try to avoid some of those common mistakes to start out with.
Right. And then
Absolutely.
when you sell your RSUs, you have that basis of the fair market value on the vesting date. But again, I think, sometimes that's not reported, on your 1099 in an obvious way. There might be some kind of supplemental schedule. Unless you know how to go and dig that up, you might not even know to ask for that or to report that as your basis.
Sure.
Makes sense,
So-
David?
You don't know what you don't know. You don't
Right,
know what you
exactly.
need.
Yeah, right. And, this sounds like these are really smart people, they're amazing in their field.
I'm not good at plumbing, so I don't know how to do that.
How about
Right?
electricity? Electrician?
Exactly.
Put some wires together?
Right.
Maybe soon. I'm working on it.
My husband's a plumber and he tells me about things he did. And I'm just like, I have no idea. What are you saying? I just
Sure.
hear circus music in my head, right?
Sure,
But,
sure. Yep. Everybody
so-
specializes in their field,
Exactly.
and that's why there's industries, and everybody goes to school and gets a tech job or a technology understanding in the field that they're going to be making a living on.
Right.
So, for those that are working in the tech or other equity heavy industries, what advice do you have for managing those awards wisely from a tax perspective?
Yeah.
One of you.
There, you want to go?
I would say it really comes down to a lot of what we've been talking about with respect to forward thinking, with connecting to other people who have experience with that, and just really trying to get an understanding of what it is that was received. Because even within equity compensation, there's all different types, and we're talking about restricted stock units now. There's other ones that are also common. There are some that aren't common, and they all have very important differences that are helpful, not just to know a little bit about, but at least have somebody in their corner that if they do have more questions, or if they do run into a new complicated situation, they have somebody already on call. They have it on speed dial. You just tap us and we're there.
Yeah, I would piggyback on that. I'd say timing is crucial with these kind of things. So we are talking about RSUs right now, and for me, the crucial part is like the withholding and on the initial part. And then when you sell it, you want to make sure you're holding it for a long enough period that you can long-term capital gains. If you have ISOs, I say timing is even more important, right?
Sure.
Because when you exercise, right, your ISOs, even though there's no gain yet, there could potentially be AMT on that paper gain, right?
Sure.
That delta between the fair market value and your strike price.
The difference. Yeah.
The difference, right? So we really want to look at your income as a whole and talk about when to timing those exercises.
Yeah, looking at it from a holistic perspective
Exactly.
versus
Sometimes
just
people could be in different income brackets and it would have a completely different AMT effect.
Exactly.
Sure.
Also importantly, making a decision about when to sell something. As much as we like to think we can predict the future, and sometimes we see people, particularly financial advisors or those who quote play the market, very confident in this, and I'll leave that to another discussion how I feel about it. But if we tell somebody, hey, hold on to this thing for another month, you'll get a preferential tax rate.
Yeah.
If it triples in value, people aren't usually happy. Or more importantly, in that example, if it sinks in value and it's worth 20% and it crashes, just because they were going to save a little extra on taxes in a month, we don't look great. So I try not to encourage people to sell only based on the tax result. Because once you do that, then you're letting the tax tail wag the economic dog.
Yes. Yes.
Yeah.
Heard that many times. Let's shift a little bit from RSUs to women in financial leadership, which is what we just talked about right before we started the podcast. Ariel, you've spoken about the growing trend of women being the primary taxpayers and financial decision makers in their household.
Right.
How have you seen this shift play out in your work and with your clients?
I mean, I think that is, to me, I've seen like a relatively new trend. I think that accounting is kind of always a little bit conservative. And even when I started, right, I'm an accountant, so I would put myself as the taxpayer on the tax return, and I would get letters from the IRS to Mr. Ariel.
Oh,
right?
okay.
So that's
Sure.
kind of, so that's how antiquated it is. They just assumed that because I was listed first,
Sure.
I was the man in the, in the relationship.
Sure.
And
You don't look like a man.
thank you. No, right.
Oh, that's such a compliment.
Yeah.
Barry, you look like a man.
That's what she
Very
was going
specific.
for.
I was.
Mhm.
So I feel like that has kind of happened, just in maybe the last decade or so. A lot of women are like, no, I want to be the taxpayer. I want to understand how my taxes are calculated. I am, we have a lot of women who are earning a lot through stock options and things like that. So
Mhm.
that's a lot of decisions they make. And I think because in accounting, a lot of the leadership roles have traditionally been male. A lot of women want to talk to a woman. It makes them feel more comfortable. They feel like they can ask questions without feeling like maybe I'm talking down to them or treating like them as like maybe they're not as intelligent.
Mhm.
So I think it has been a really cool role to have. It's like a good kind of niche market. There are a lot of
Okay.
women who are like, yeah, I need an accountant. I have all this money. I need some advice, but I want someone who will treat me like the professional and the smart person I am. Right?
Sure. Anything to add, Barry?
I try to do that regardless, but I do support that fact.
Man, woman, animal, whatever.
Yeah.
Right. I mean, it's just for a lot of people, it's a personal preference, right? Like,
I'm not offended. It's
right.
totally fine with me.
Right.
Okay.
And some people might just feel more comfortable with that or, just want to have that kind of leadership come from a different type of person.
Sure. And what do you think are potentially, if there are any, unique challenges or opportunities that women face when it comes to tax and financial planning?
I mean, I think a lot of the unique challenges are that for many women,
Mhm.
it is a new world for them. I'd say, kind of looking at the other side, a lot of women who are nearing retirement age maybe have never thought about this or talked about it or considered it. So it's something that they don't have the vocabulary to discuss or don't, maybe have like a good background knowledge in. I'd say that's a big challenge for a lot of older women. Another challenge I'd say is it is hard sometimes as a woman to be taken seriously in this arena.
Interesting.
Yeah, I think there have been times where as a client, you have some concerns, you want to have some questions, and your concerns and questions are maybe just not taken seriously. It's like, oh, don't worry about that. I'll do it for you, and
Mhm.
things like that. So I think that can be a challenge,
Okay.
right?
Barry?
I've seen, and this might be anecdotal, but I don't know how big the sample size is here, but we've seen, like Ariel was talking about with older clients, one of the two of a spouse, taxpayer spouse, or I guess a man and a woman in this case, passes away. And almost all of the times it's been where the woman who's the survivor of the relationship has had very little knowledge of what to do next. And we have a lot of hand holding that we're very happy to do. But I don't know too many examples off the top of my head where it was reversed, where the woman passed away and then the man made it as if, oh, I don't know what to do, because a lot of times they were the ones doing it to begin with.
Sure. And I have clients whose husband has passed away and a couple. And yeah, in this one particular example that I'm thinking of, he passed away. He did not plan properly, and all
Yeah.
the accounts, all the assets were all in his name, which
Yeah.
I was very surprised about, and subsequently had to go through probate. The wife did not have any assets that had any liquidity at all and had to wait somewhere around just under 2 years before the probate process was finalized, and then subsequently her being able to get now access to the assets. So I definitely understand that
Yeah.
particular scenario. And I didn't start working with this couple until afterwards,
Right,
until
it's not your
after the
fault.
fact.
We get it.
No,
Yeah,
of course.
yeah. But
Yeah.
so I
I've
wasn't
had-
involved in the beginning.
Yeah. And I've had clients whose husband passed away, and then just something as simple as just like paying their quarterly estimated taxes. They don't know how to do that. They don't know where to go there.
Mhm.
If I
Sure.
ask for information, they don't know how to access it.
Sure.
And I think it's important to remember that you don't want to be thinking about this stuff at like one of the worst times of your life.
Right. Right.
That's like a bad time to be like, oh my gosh, how do I get my brokerage statement? Or like,
Sure.
yes, am I on my bank account? So just telling women, yeah, go ahead, get it, like be in charge of your financial situation.
So how do you think CPAs and wealth advisors and firms that are in the space, how can they do a better job of empowering women to feel more confident managing their finance and, of course, their taxes?
Yeah. I think again, first step is a lot of the unknown. I think
Mhm.
sometimes women are just intimidated. They feel like they can't understand it, like they won't understand it. There may be jargon that they're not familiar with,
Mhm.
or just like consequences that they don't understand. So when I talk to clients about their tax situation, I try to do it in a way that doesn't have jargon,
Okay.
and just tell them. And then a lot of times I'll be like, okay, well, I have a stupid question. I'm like, there's no stupid questions, right?
Mhm.
Whatever question you have, go ahead. And often they're not stupid. I can't think of an example where someone said that and then asked like a genuinely stupid
I may
question.
start listening now and see if I can find
If
one.
you can find one,
Yeah.
right? They're usually not stupid questions. You just
Mhm.
think that they're stupid because you're like undervaluing your own innate knowledge that you have about this.
Mhm.
So I think, yeah, no jargon. I think encourage questions just to try to meet people where they are. And then I think the last thing is, again, it's just trying to get people that knowledge, because as soon as they have that knowledge, then you can feel much more proactive about your situation.
Sure.
Yeah.
You're Ariel, you're passionate about proactive tax planning, and
Yeah.
Goldstein Wealth Tax Advisors is in that culture.
Right.
Why do you believe it's so critical, and what can it actually save clients? How can it value add for your clients in the long run by being proactive?
Well, I mean, I think that's kind of what Barry was saying earlier,
Mhm.
right? April 14th is way too late, right?
Right.
I mean, obviously, we can save you penalties and interest, but
Sure.
we can also save you stress and uncertainty if we can tell you, what your tax liability is going to
Mhm.
be. But we can also then we have time to talk about timing issues. Is this year a good year to exercise, or do we want to wait till next year? Is this year a good year to sell your rental property? From a tax perspective, right? That's
Mhm.
not the only
Sure.
concern, right?
Right.
Or what will happen if you sell it next year? And the other we can also help you like with RSU withholdings. If we
Mhm.
know that you're under withheld, we can get that withholding fixed and help you like not have any underpayment penalties.
And that's very helpful on a first year we talk to a client, because
Yeah,
once they're in their sophomore year, we're already well organized and making sure we're getting pay stubs and meeting with them regularly. But early on, that's when a lot of the pain points can happen. So we meet somebody and we try to get that into a good strategy, a good routine. And we don't want it to continue because people have
Mhm.
clearly had challenges before, and we're trying to stop that from recurring.
Sure.
and I think a great thing
Mhm.
about proactive tax planning is there's always life changes coming up, right? Retirements, maybe you're taking maternity leave, you're changing jobs.
Mhm.
And a lot of those can also help us like determine tax strategies for you, right?
Sure.
Maybe you're moving and you're taking some retirement distributions, right? Are you moving from one state that doesn't tax retirement distributions to one that does,
Sure.
right? So depending on your situation, there's a lot of kind of considerations.
So can you give an example, one of you or both of you, how year-round planning, tax planning, makes a significant difference positively for the clients that you serve?
Sure.
Yeah, I would say
Mhm.
a good example is when somebody has a rental property and
Okay.
they may just have a default type, oh, we're going to depreciate the rental property in a standard allocation with a standard class life.
Mhm.
And then we help advise on really looking at depreciation in a way that can be much more assertive and not just the standard. And we can recommend to people getting things like a cost segregation. We don't
Mm.
do that
Sure.
necessarily, but we have people we can connect them to.
Sure.
That just allows there to be good documentation to support further a more expansive deduction in the current year. Whereas if somebody was to do that after the fact, a lot of times it's not as valuable because it's already too late. The year's been over. Now, it's not as if it can't be fixed with that example, because you can always do an accounting election to change to do the catch-up depreciation. But if it's April 14th, like we're saying, we're not just going to be moving the ball that quickly down the field. We're just trying to get things done. And it's a lot harder if we do it after the fact.
Understood. So what's one tax or financial habit that you wish more people would start practicing? I'll start with you, Ariel.
Oh, that's a good question.
Did I get you?
Yeah.
Separate your personal and business expenses.
Oh, yeah,
Ah,
please.
Different
A good,
accounts.
yes.
that's a great one.
That's
Yes,
a great one.
absolutely.
Especially when you're doing multiple years for a new client and they have them all in one account. It makes it a lot harder for your accountant and for them to feel that they're getting a deduction for a legitimate business expense.
Yeah,
Sure.
I'd say be intentional about
Intentional. Mhm.
your planning and what you're doing. I was just speaking with a client the other day. He has a sole proprietorship and he's also a
Mhm.
W-2. He works, has a salary. And in 2026, he's planning on transitioning and just working, just having his sole proprietorship being his like only source of income.
Mhm.
So I was talking to him about maybe changing the kind of business he has,
Mhm.
being an S corp. And I said, if you're planning on making this much, you could save $12,000 in self-employment taxes. So I think just even if you think you already know the answer, being intentional and asking those critical questions before hopefully, right, the changes are
Mhm.
made, decisions are made, I think is my advice.
And as
Fantastic.
corporation elections are due 75 days after the year in which you wanted to apply,
Mhm.
now, of course, there's plenty of examples where there can be late filings and
Right.
different procedures, but ideally, following the rules as they were written makes things a lot easier for people instead of scrambling at the end to just say, oh, yeah, I was an S corp for the whole year.
Yeah.
Understood. Ariel, what excites you most about the future of your work with Goldstein Tax Advisors?
Do tell.
Oh, what excites me? I think
Besides Barry.
besides Barry,
Well, I'll walk out of the room.
great people. I think that the future of accounting is really going to be more of an advisory capacity,
Sure, absolutely.
right? So that's the area that I'm most excited about.
Sure.
And I think because I think it's going to be less data entry, less bookkeeping, less entry on the tax return side. But there is always going to be a need for someone to talk to you about what are the results of your tax return? What do they mean? How can we like talk about your situation to get you results that are more in line with your financial goals and making sure that things are reported correctly for you in these specific ways, right? So classification can be important and things like that.
Now, just off topic on this a little bit. AI
Yeah.
is the
What's that?
biggest. Well, if you don't know, Barry, which I know you do, but if you don't know, we're going to have a conversation off the air.
That's a whole nother, that's
But
another.
AI, how do you think AI is going to help or not help the tax advisory and the financial services firm? How do you see, and I'd love to get both of your take on this.
You want to go first, Barry? Or
Yeah, I'll go first.
yeah.
I am just generally an optimist, so I'm not
Okay.
really concerned about professions or jobs, especially from a white collar type way going away. It may
Okay.
shift. An example that I remember was in the 90s, they came out with ATMs and bank tellers were very worried that they wouldn't be able to dispense money to people, so they wouldn't be useful. But it turned out, I think 20 or 30 years later, there were more bank tellers than there were before. And so it just shifts from people dispensing cash or entering data into tax software and to actually having meaningful relationships with clients.
Sure.
Yeah. I think I'd agree with that. I think I'm kind of optimistically excited about it. I think it is going to help, hopefully, with that kind of bookkeeping or data entry side. But, AI can hallucinate and can say,
Inaccurate. Yeah.
inaccurate information, right? So I think there's like an opportunity to use it to help, kind of get the grunt work accomplished, but then actually like looking at it, interpreting it, verifying it, that you're still going to need, I think, professionals to help on that side. But I think it's going to be another cool like tool to use.
Okay.
Yeah, and who knows if there'll be more accountants, fewer accountants, what the actual outcome will be. But overall, I think the trend will be in such a way that it will be better for all the parties involved, whether that's the workers, the clients, however it wants to be sliced. I think everybody will have a better experience.
Okay. And where can listeners and viewers connect with you, Goldstein Tax Advisory, and specifically you, Ariel, about the services that you and your firm provide?
right on our website.
Yeah, goldsteintaxadvisors.com. You can set up a new client inquiry if you're interested, and you can also schedule a meeting with us at any time if you're a current client to kind of talk about your tax situation, make sure that everything's under control and going the way you want it to go.
Yeah.
Okay. And any final words are from the both of you?
November is a great time to do some tax planning.
Okay.
Yeah, now that we're past the scary
I agree.
Halloween, we can really get down to
Get
business.
to the real scary part.
Yeah.
No, just kidding, just kidding.
Yeah, I
And-
would say it's just
yeah.
important to be connected to the financial health throughout the year and not just once a year. And we're here to help all year round. We don't go too many places other than individually. We do like to still travel and get out, but collectively as an office, we're here to be helpful for our clients, no matter what time of year it is.
Fantastic. Well, thank you very much. This concludes today's episode of Jet Setting Wealth Advisory. A big thank you to Ariel for share your insight on tax preparation, along with Barry Kaufman for the contribution that you've participated in today's discussion. Lots of great value here. Thoughtful year-round planning, always the fundamental of good tax planning. If you found today's episode helpful, please don't forget to subscribe and leave us a review and share it with someone who could benefit from smarter tax strategies. To learn more about Goldstein Tax Advisors and the services that they provide, please visit their website. For those of you that are watching this, it will be on the screen. And for those of you that are listening to this, it will be in the show note. I'm David Yu, airline pilot, wealth advisor, and host of the Jet Setting Wealth Advisory podcast. And for more conversations with professionals shaping in the future of finance, please continue to follow us. And until next time, keep your goals high, your plan steady, and your financial future on course. Thank you, and have a great rest of the day.
Thank you.
Thanks, David.
Thank you.
Bye.
Thank you for flying with us on today's episode of Jet Setting Wealth Advisory. If you enjoyed your journey through the fiscal skies with David T. Yu, don't forget to subscribe to our podcast and keep your financial knowledge soaring. For more insights and personalized advice, visit us at www.dtywealthplanningsolutions.com and connect with David directly